Genting Singapore surged 10% on 14 November, the biggest one-day gain since March 2020, after 59% jump in the third quarter. On top of that, it also talked about how the capex for the upgrade and expansion of RWS will hit 6.8 billion capex. Is the amount too high? What are the prospects going forward? Let's find out more in this video. First off, let's talk about the elephant in the room, the increased capex to 6.8 billion funded through internal resources, as announced in the third quarter results. Let's backtrack a bit to help you understand a bit better. So while RWS operates many attractions like the Universal Studios, Sea Aquarium, hotels, etc., we all know that the casino is the one that keeps the money coming. Due to the duopoly structure in Singapore, Genting Singapore Casino only effectively competes against MBS. Hence, in order for the government to ask MBS and RWS to invest in developing Sentosa as a strong tourism destination, the government has to provide them some carrot stick, right? Yeah, so this is where I think the 6.8 billion capex from RWS to develop it into a premium resort is really a smart move because Genting is killing two birds with one stone. First, you help the government to bring more tourists to Sentosa, and second, at the same time, attract the high rollers to visit their casino. Personally, I will definitely visit it once the Minion Land and the Singapore Oceanarium are up and running in 2025. But coming back to the 6.8 billion capex, many investors are wondering, wow, so much money leh. Will my dividends be affected? So with that, I decided to do some Excel calculations to see how long Genting Singapore need to pay back this capex using their free cash flow and how it will affect the dividends or not. Okay, so this is a very simple calculation done using Excel for the 6.8 billion capex payback period. Let me walk you through step by step, okay, on how I derive the number of years to pay back that capex. So first of all, I input the number of issued shares. This is sitting at 12 billion. Okay, so assuming that they want to pay a 4 cents dividend next year or going forward, so the annual dividends payout will be this amount, $482 million. Okay, so we are talking about the total capex, right, of 6.8 billion. But according to City Research, which I will share with you on the picture there, the capex that is already spent amounts to around 1.6 billion. So I will assume that the balance capex, okay, up until 2031, okay, this is as stated in the announcement, will be the balance of 5.2 billion. Okay, so assuming the annual free cash flow of $1 billion. So this is in comparison with what was achieved before the pandemic. So FY 2018-2019, they are around 1 billion free cash flow. Okay, so that is a really a mind-boggling amount. Okay, and so let's say if we were to deduct away the dividends payout, okay, so what will happen? You will be left with around 500 million free cash flow. And assuming you want to pay the entire capex using the balance free cash flow after you pay out the dividends, okay, so that will equate to around 10 years to pay back the entire capex. So what about if Genting Singapore go and borrow the entire 5 billion? So that's still okay because their shareholders' equity as of June 2023 is sitting at 8 billion. So even if they borrow 5 billion, right, this only amounting to 0.6 times total debt to equity because right now they are a net cash company, they don't have any debt at all. So this uh, approach works as well. And assuming, okay, so let's say maybe I go for a 5 cents dividend, okay, so you can see the number of years payback become 13. Okay, and assuming I borrow, like 2 billion, okay, so I borrow 2 billion, okay, and then this will be minus this will equate to 8 years to pay back. So you can see that they still have the capacity to pay out dividends as well as to um, plow back this free cash flow into the capex to develop into RWS 2.0, which brings me to the next point. On top of a revamp of the current attractions, Genting Singapore also shared that this higher capex is because it is now targeting more premium offerings, which I believe is the waterfront complex, where construction will begin in 2024. So technically, this patch of land in their master plan will become like this in future with over 700 hotel rooms. If you want me to make a guess, I would say that the room rates will be pretty crazy at above $600 per room as compared to around 300 plus to 400 per room right now. So on top of that, I chanced upon an article which talks about the new Macau under the Chinese government control. So in particular, the new Macau will transit from a VIP premium market to that focus on the masses, which is directly opposite to what RWS is doing. So the question is, if you are a wealthy businessman from China and you want to enjoy yourself, do you want to visit RWS with premium offerings or a place that is now catered to the masses? So long story short, I think this premiumization strategy is definitely a good move by Genting Singapore. Okay, last but not least, let's talk about the valuations part. You can see how Genting Singapore is trading at 1.4 times price to book versus the peers like Galaxy Entertainment at 2.8 times or Las Vegas at 8.2 times. Or even worse still, Win Resorts has a negative book value, that's why it's showing NA at the moment. And looking at the 5-year price to book history chart, right, we can see how the price to book ratio has been relatively the same over the past 5 years, predominantly because the share price and the book value haven't changed much. I think that things are definitely looking up for Genting Singapore with the up and coming new attractions like Minion Land and the Singapore Oceanarium, and the diverge between Macau and Singapore's positioning. While the dividends may not grow much due to the high capex of 6.8 billion, capital gains could more than make up for it once a bigger RWS is up and running. What about you? What do you think about Genting Singapore? Is it a good dividend stock going forward? Let me know in the comments down below, and don't forget to smash the like button and subscribe to my channel for more of such investing related videos. Next up, if you have the time, you can also watch this video over here where I compare the three local banks. With that, thanks for watching and I will see you next time. Bye.